Hello, good afternoon, and it's a good afternoon if you are a bear because we are going towards that mark of 24,800 or threatening to go just around that mark. We are very close to the lowest point of the trading session, 24,830 thereabouts at the index level right now. So quite a sharp fall is what we have witnessed today. Volatility has taken a bit of a spike. The last time I checked, the India VIX was up 7 to 8%. So there's a lot of volatility in the market right now. All the key sectors are trading in the red. PSU banks, they are one of the biggest drag today. Of course, SBI, that's playing spoil sport after that Goldman Sachs downgrade. So that stock was down 3 to 4% the last time I checked. What's holding up okay is a couple of these tobacco companies. Godfrey Phillips, on account of the fact that the board is likely to consider a bonus issue come September 20th in the ratio of 2:1. And then VST Industries, which goes ex-bonus today. Both of these stocks are doing fairly well in the trading session. Telecom sector is under pressure. Vodafone Idea will come up for you on the screen. That stock was down 10 to 12% after Goldman Sachs downgraded the stock, and not just downgraded actually. In fact, they are calling for a 80% downside on the stock from yesterday's closing price. So that stock is down. Indus too is under pressure. Goldman Sachs has downgraded the stock to a sell from a neutral earlier. Wondering, Aisha, as to what the reason is of the fall that we are witnessing in the market. You can probably attribute it to those tighter norms that SEBI is going to come up with for F&O, or you can attribute it to that September 9th deadline. But definitely something is spooking the market for sure.
Oh yeah, absolutely. And I don't think that the global uncertainty is really lifted off right now, because when we did walk into trade and when we did begin our market fall, global markets were fairly stable, but on close the picture has not been the same. China has fallen a good 1% for itself. Japan as well has seen a good 260 point slide. In fact, not just that, look at how Europe is panning out. It's a sea of red all across. About a 1% downtick is what you're seeing across the board. FTSE MIB is down over 300 points. DAX is down 150 points. And the US futures as well are trailing right now, 173 points lower for Dow futures. S&P futures indicating a downtick of about 0.7%, and Nasdaq once again is staring in, at least in the futures market right now so far, a 250 point slide once again. So it seems like a very synchronized global move. That was the case start of the week as well, and I don't think we're quite out of the woods yet. But having said that, what are your key cracking points or key pressure points? Within the liquid universe, it's surely Idea, which is headed lower by 11.5%. GMR Infrastructure is down about almost 5.5%. Canara Bank, that's also seeing a slippage of about almost 5%. Indus Tower, which is down about another 4.5% today, and then SBI, which is down 4.25% as we speak. In fact, SBI has been a downtick from the word go today, post that Goldman Sachs note which came in, wherein they downgraded the stock to a sell from the earlier neutral and cut the target price as well quite significantly from the earlier 841 to now 742, talking about multiple headwinds ahead as the ROAs peak being their key concern. So that stock has been sharply lower and hasn't revived ever since. Not just that, look at Tata Motors, BPCL, ITC, Reliance down a good 2%, ICICI Bank down 2%. So the heavyweights are the ones which are weighing really heavy, as is the broader market. But Kunal, Naresh, Daljit Singh Kohli, all of them in the studios or on the show with us right now to talk about where the market is headed. Kunal, not the best of ways to go into the weekend, a 360 point fall in the Nifty alone, but it seems like we're part of the larger global weakness.
Yeah, we are part of the larger global weakness, and I think the last 2 days there was some sort of inkling that the markets are taking resistance at higher levels. Now, the move actually on the downside accelerated when we managed to break below that 25,000 mark on the index. That was the first hour or so where the index corrected below the 25,000 mark on the spot basis. I think that has probably accelerated the sell-off for the indices. So it started off with SBI showing signs of weakness, and then few private sector banking names showing signs of sluggishness. But I think that's now engulfed into the rest of the markets, also breaking below those critical supports for the indices. Now on the way up, what we are looking out for is that if the index is unable to come closer to that 25,000 mark, I believe that the pressure would probably continue for the index for the next couple of days.
Okay, Point taken. So that's the view on the market right now. But in fact, what is causing that pressure on the market? Before I go across to my guest, let me bring on board Ankur as well, because he's talking to us about a couple of important updates that are coming in from the regulator, and that could be part of the reason why the market is under pressure. Ankur, why don't you begin by telling us about the F&O norms, because it seems like SEBI is going ahead with tighter regulation on that, right?
Yes, definitely. Market regulators SEBI is reaching out to various stakeholders for very long for these tighter F&O norms. Remember, a consultation paper was floated where 7-point agenda was given, in which many of the stakeholders have given affirmation to the steps which has been outlined by SEBI. We understand that few of the exchanges also are in largely agreement on tighter F&O norms which has been proposed by the market regulator, and we understand through sources that these final norms may be announced as early as this month, because the review process is near completion, and after that SEBI has to take a final call whether or not to implement these norms in entirety, or there are few tweaks which can be suggested by the market regulator. But few of the proposals which included the increasing margins of F&O for retail investors, that may stay. We understand that the current requirement is around 5 lakhs, that can be increased to 20 or 25 lakhs. Similarly, the rationalization of options is also under agenda, which may be there in the final norms which will be suggested by market regulator.
Okay, so that's about the tighter norms on the speculative trading. But Ankur, do you think part of the reason of the pressure today could be that FPI deadline on September 9th? Could that be a reason? What's your own understanding as to what part of the FPIs get actually impacted? Is there a way that they can continue their holdings with a penalty perhaps?
Yes, definitely. So September 9 deadline for looming for foreign portfolio investors who were supposed to meet the ultimate beneficial ownership norms. Now we understand that only a small number of FPIs are going to be impacted by this deadline, because largely either they have met the norms or they have been exempted with the section 43B which was given by SEBI in its circular. We understand that the impact on FPIs is going to be minimal, and even if any FPI is getting impacted, there is 6 months after paying 5% penalty, the investor, the fund can stay there for 6 months more. So all in all, the deadline which was there till September 9 to comply with beneficial ownership norms or their registration may be cancelled is not the case that it is the hard stop for FPIs which do not complete these norms. They still have 6 months to comply. But remember, last year there were many consultations with the stakeholders which was done by the market regulator, and they were reviewing the case whether or not this eligibility, the impact of norms is going to be letter and spirit. So there were few exemptions which were provided by the market regulators, and many of the large FPIs have taken the route of these exemptions which was provided, and now we understand the impact is going to be minimal on this UBA or ultimate beneficial ownership norms, which the deadline was September 9, but it can go beyond September 9 also by paying 5% penalty.
Right, Ankur, we'll leave it at that. In fact, let's pick up on that point forward. Daljit, hi, afternoon. Do you think, aside of the global weakness, part of the fear in the market right now also could be with news around the SEBI F&O norms, which my colleague just highlighted?
Yeah, good afternoon. Yes, I think that would be one of the considerations, because these days markets, you will know that 95%, 98% of the total market volumes are F&O. So most people are worried about how things will pan out over the period, and the way things are being talked about, more strictness there. So obviously, it will have some impact on the market volumes. But I think that will be just, again, say, temporary issue. It may be 1 or 2 days issue, and then people will get accustomed to what are the new norms. Initially, yes, there is always a resistance to the change. we might see some of that impact happening. Also, we have to understand that market has been moving in one direction for quite a long time. Everybody has been waiting for some kind of correction. Every day you talk to so many people, our investors, other stakeholders, everybody is saying why market is not correcting. So market is just looking for some reason for correction, which may or may not last for long and which may or may not be justified, but that is what the market is all about. So I think one should be ready to see some of this volatility and that this, of course, the global uncertainty, especially on the rate side. This again is a good confusion. No? Cutting of rate is good for the market or not good for the market. Some people will say cutting a rate means that, okay, you are waiting for this for a very long time, that Fed will start reducing the rates. But it also means it is doing because data is not coming well. Then this fears of recession in US, all this will again come up. So it's both two ways, both the things are coming in. What I would say is for our investors and for long-term investors, I think this will create some mispriced opportunities in between. And if you have liquidity, you should look for those mispriced opportunities. Otherwise, just stay put. This will just be a temporary thing, but it will pass.
That, Daljit, you find those opportunities? Any themes or sectors that you can talk about?
Yes, we are looking at pharma, agrochemicals, and some of the manufacturing themes, which could be across the sectors, where PLI schemes are there. There are some new age themes like say environment related products, environment related companies which are into those kind of activities. It could be on services side, it could be on the product side. Then there are this budget. There was a lot of emphasis on employment generation and skilling of youth, etc. So there are certain companies which are in the organized sector providing manpower to the organizations, looking for some kind of restructuring there also. So those kind of companies we are looking for, and they still have valuation comfort. I would say that over next 2-3 years, trajectory of earnings is very clear, and valuations are not very demanding.
Taken. So that's the view on some of the themes and sectors. But yes, have to say pharma as well as chemicals both are doing quite well. And let's pull up some of these intraday charts. Suven Pharma up 5%. Glenmark Life doing quite well. You also have Narayana Health doing okay for itself. Piramal Pharma is also up 3%. Remember, Monday is perhaps the day we might be hearing more about the US Biosecure Act, and for some of the CDMO players that might mean more opportunities. So some of these stocks might be factoring that in already. The other space, the agrochemical and chemical space that Daljit was talking about. So Gujarat Fluoro has been doing quite well for the last couple of days. Sumitomo Chemical is up 4% right now. You also have other names doing quite well from that entire industry like PI Industries. So definitely some of these names deserve mention. PI Industries is a stock that I'm talking about because that one is inching higher along with Sumitomo Chemical as well as Gujarat Fluoro. But Naresh, what's your view on SBI and SBI Cards? Divergent move on both of them on account of a brokerage action today?
So would wait and watch further for the next few sessions because generally we see a move on the day of a report being initiated and the next day there is a fade off. So for now, if you look at SBI, say 730 to 750 is a very strong support band. That's the low it did on the election day. That was the low back in March to May. So if you get a dip closer to those levels, then maybe that's a buying opportunity. So you want to be accumulating at 760 to 730 band, which is where it should bottom out. SBI Cards on the other end has been turning around for the last few sessions, broke out about 740. Now at 800, any fade off back to 770 would be a buying opportunity.
Okay, point taken. So we'll watch out for those levels on a couple of these counters. But time now to head into a very short break. Don't go anywhere. Lots lined up when we come back.
Back with closing trades and have gotten only worse actually. We're now at the low point of the day. It's caving in by a good 300 points right now. Kunal, where does the next support come?
So I think the next support for the index now is sub the 24,500 mark, which means we could be looking at least another 300, 350 point correction before the first level of support kicks in for the Nifty.
Okay, Naresh, what's your view and what will be your recommendation then perhaps with the kind of positions people have? Should they just unwind? Should they carry on, hold on for Monday? What's the best strategy?
So for now, it is better to have no position because we've seen a one-day tick which does not go well with the global indices also. We've seen a sudden take, could be a FII selling happening today for the last day, etc. So we'll know better on Monday. For now, 24,500, 600 is a price point, which is a strong support. So at current levels, the risk reward on the downside to short also is not great and would long only on Monday, not today.
Interesting. But Naresh, is the weakest link still banks? I mean, today, of course, there is an exaggerated move by SBI after that Goldman Sachs note. But other than that?
So banking remains the weak spot because that was an index which did not make a new all-time high. We made a new all-time high yesterday, at least on the mid cap and the small caps. But what is interesting in today's move is the fact that ICICI, Axis and other banks are taking a hit. You just have a 0.5% downtick on HDFC Bank. So that is not taking a large hit. Same is the case with the Kotak Bank. So for now, it seems like more of a sell-off from FPIs. We've seen there is lower holding in HDFC Bank relatively, underweight across the board. So for now, it looks like a one-day move. But yes, the weak point remains to be banks. Till the time we don't see banks reviving, the momentum continues to fade off on the Nifty as well.
Daljit, if you could talk about SBI specifically, and if not that, at least the move that we are seeing from the PSUs to the private banks. Daljit, the question is for you.
Okay. So see, banks actually overall, I think our view is slightly negative. We have actually reduced our positions in most of the banks. And in fact, right now we hold only the power financiers, no other thing in the BFSI space. So main reason is that if we see last 2 quarters, the asset quality issues have started cropping up. There are a lot of data points coming in that people are borrowing from multiple lenders. So exposure for these lenders is increasing to the same customer. That is a good red flag. And in the last 5-7 years, actually, we see almost all bankers have forgotten that there could be an NPA from retail side also. No? Everybody was clear that there could be an NPA from the corporate side, but from retail, there is no NPA. But that situation can change the way things have moved in the last few months. We have seen people borrowing from multiple places, this digital lending, faceless lending and all of those things. So while that has created convenience, but it has also created a hazard in terms of asset quality. Second thing is on the cost of funds. Most of these, the best part for, or the best time in terms of cost of funds for all these banks is over. From here now, it will be more of very tightening situation, and unless RBI starts reducing the rates at a faster pace, which in our base case scenario is not the probability as of now. So I think for the banks, growth as well as asset quality, both will be a challenge in next few quarters. There is this fight for deposits. There are other alternate sources of income for people. So deposits are becoming much lesser scaler and costlier. So all these things are, I think, negative for the banking sector as of now. We believe that next 1 or 2 quarters, this banking sector shall remain an underperformer. And therefore, within the BFSI space, if one has to look, one can look at the specialized financing or some focused financing, which could be like power financiers, gold financiers. Those kind of companies could be of preference right now.
Daljit, great to have you on the show. We'll let you go on that note. Thanks for taking time out. In fact, talking about SBI's weakness today, we just chatted with CS Shetty just a few days back last week. And he said that, with a strong balance sheet, SBI is heading towards the 1 lakh crore rupee profit goal.
I see that our guidance in terms of 14 to 15% credit growth looks like that here to stay for at least a couple of years.
So let me just break it for our viewers. Return ROA, the most magical number for SBI, is now above 1%. NIMs are perhaps best in the industry. Corporate profitability is really growing in the in double digit. So can I say that if not this year, certainly next year, SBI is on course. I'm going to hold my breath when I put that number. Is on course to be the first company or the bank in India, that number, to cross 1 lakh crore.
Without sounding, giving a forward guidance, I can say that this institution has the potential to reach.
But am I thinking right that you headed there?
We are heading there. We are heading there, and obviously the aspiration is to be there, and the aspiration to be the first company to be there. And I strongly believe that this company has got, bank has got the potential.
If you have to
reach
reach this mark of 1 lakh crore, you need the economy and the credit cycle in your side, and you need the NPA cycle not on your side. These are two things which have to happen. Economy and credit cycle has to be with you, and NPA cycles have to be away from you. So can I say for 3 years you don't see an NPA cycle coming in corporate also and in unsecured loans also?
I think let's first talk about the corporates. I think corporates by and large are deleveraged, and they're also cautious in terms of borrowing. I think we don't see the kind of borrowings which are not justified. The need-based borrowing is happening, and also what we see that prudence in terms of using their own cash flows, cash accruals before they actually borrow. So balance sheets of the corporates are good, and eventually they have to. We see that a lot of capex plans are being put in place, which means that the credit growth will happen.
Okay, so that's about SBI, but time now to take the closing trade ideas from our technical experts. Naresh, you go first.
So would be a little more defensive look at Dabur as a trade. That is a stock which is closer to a breakout. So at its current levels, that looks a risk reward trade.
Okay, so Dabur is a buying idea. And Kunal, what about you?
Looking to book profits on Bajaj Finance, that's a stock which has done exceptionally well, and looks like that the stock is hitting some sort of a resistance at this 1850, 1900 mark.
Okay, time now to head into a very short break. Last 30 minutes of the trading session and the trading week. We'll see you on the other side.
Back with closing trades right here in ET now. No resurrection whatsoever. In fact, now we're at the session lows, 360 points lower on the Nifty futures. 24,868 is where we're currently at. A solid 1.5% of a decline. I don't think any sector is spared right now. Even FMCG and pharma, which were sort of relative outperformers, they as well at an index level are in the red. The breadth of the market, of course, is also very poor. Within the F&O universe alone, you've got a count of 168 as opposed to 17 to the advances. Only cases in point being Asian Paints, Coforge, PI Industries, Marico and SBI Cards, which seem to be the only islands of green right now, along with a Bajaj Finance as well. But Sudeep Bandyopadhyay as well joins us on the show to talk about what he's making of the market right now. Sudeep, hi, afternoon. Would you say that the fall today seems more global in nature?
Well, definitely it's global in nature. If you look at the market, Aisha, since Monday, I think global markets have been correcting. And, we've been holding somehow from Monday till Thursday. And today, I think, Indian markets also have taken a beating. There are fears around the US non-farm payroll data, which comes out in the evening. And there's a bit of nervousness. Also, supposedly, there is little concern about this, the non-compliant FIIs exiting Indian markets. And because from Monday onwards, either they have to be compliant or they need to shut shop. So there is a bit of confusion around that. Not sure what is the impact exactly, but general sense of nervousness is there in the market. I think all these things together with the fact that Indian markets were at all-time highs, created this correction. I don't think I'll be too perturbed. I think at such high levels and after markets has rallied continuously for a long period of time, bit of correction, profit taking, whatever we may choose to call it, is good for the market's health.
Can Be attributed perhaps to what's happening across the globe or those SEBI norms or the FPI deadline. But come Monday, it will be a lot about what's happening with the GST meeting as well, because that's an important factor to watch out for. In fact, my colleague Sumit Chaturvedi will join us to talk to us about what the key expectations are from that GST meeting, because a lot of recommendations are on the table, like perhaps the reduction of GST on health insurance, etc. What actually comes about, we'll get to know on Monday. But Sumit, what are the expectations?
Well, on coming Monday, September 9, GST Council is going to meet once again, and a number of issues are on the radar of the Council. Most important being the GST on health insurance premiums. Well, as far as sources are concerned, they are telling us that Fitment Committee has not been able to form any concrete opinion on health insurance premium, and the matter will now be discussed in GST Council only. Well, definitely, State Exchequer and Centre also, well, they will lose a lot of revenue, and it is to be seen whether that revenue would be foregone by the states or not. That's the one important issue. Other issues that can come are taxation. When it comes to taxation on Infosys, taxation on foreign airlines, taxation on shipping lines, these issues would be discussed. Some relaxation on that front can come. Some other issues that can be discussed are metal scrap, tobacco products. In FMCG, some form of namkeen can also be discussed. GST on those issues can be discussed, on some medicines as well can be discussed. So these all issues will be deliberated upon in September 9 meeting. But most important is going to be the GST on health insurance premiums. Well, we all know that has been a political debate after the Congress demanded GST on medical insurance should be brought down or scrapped. And Gadkari, the part of NDA, also Road Transport Minister, he also asked for same. So all eyes are on Monday meeting now as far as GST Council meeting is concerned.
Well, yes, waiting by for that, and you're going to have a busy Monday, Sumit. But what about you, Naresh, from the entire insurance vertical, apart from HDFC Life? Is there anything else that you would want to recommend?
Financial services, the stock has come back to the highs it was last seen in 2021, consolidating around the 1100, 1130 mark. So that looks promising. And Life Insurance Corporation of India, which has been consolidating, has corrected 10-15% from the top at 1000, 1050. That also looks interesting.
Okay, bunch of those names, Max, LIC, all looking good. In the meantime, what's actually weighing heavy continues to be some of the banks actually, SBI, ICICI Bank, Axis. There's, of course, L&T amidst, outside of that pack, ITC, which is lower by about 2%. And then Reliance, wherein the record date for the bonus is still awaited, it's down about 2.5%. Sudeep, if the market were to fall further over here, would you look at adding positions to any of the names? And if so, where is it that you find opportunity after a little bit of a correction?
Well, I think one area which you just mentioned is Larsen. I think this is a fantastic story. And with a strong tailwind behind it, whether it's construction, infra, domestic or international, including hydrocarbon, I think it's got a long way to go. So correction is a buying opportunity. I won't be surprised if buying starts coming even today, and probably that's pretty much what is happening after correction. The other pocket, share rather, which I would probably look at is Reliance. If there is further correction, I think it's definitely worth looking at. Bonus record date is a matter of time; it will be announced. And the way the businesses are poised, some kind of value unlocking in the near future. I know we've been talking about it for a long time, but it's a certainty. The only timing is uncertain. So, for a long-term investor's point of view, Reliance with correction, it's definitely a good buy.
L&T, some of those blue chips continue to be the buying opportunity. But come Monday, we'll also be talking about pharma a lot more, because that US Biosecure Act is something that perhaps will get tabled in the US houses. What comes out is something interesting to watch out for, but it does look like that there could be that business that comes to India, especially the CDMO players. Sudeep, is there any specific name within pharma and these CDMO manufacturers that you are watching out for keenly?
I think, pharma, which I like, is a domestic focused pharma company. So not really who are dependent on the US market, generic pricing pressure, all these regulations. So something which is outside, which is Mankind Pharma. That's one stock. And post this BSV acquisition, which they have announced, I like it even more. As far as the companies operating in the US in a big way, I see Sun as a company with a more potential price increase from current levels. So from a long-term investor's point of view, Sun does look good. And I would definitely recommend a domestic pharma company like a Mankind.
Right, okay, that's pharma, that's looking good. Kunal, what's your list if the market is going to decline a little further? Any medium-term opportunities that you scout or sense?
Nothing as such on the charts as of now, but in case if it dips down back to that 24,000, say 24,500 kind of a zone, then we could be looking at a different mix of sectors. And I would probably believe that maybe the PSU end of the market, which has been beaten down significantly over the last 2-3 months from the June-July highs, and many of the stocks have corrected by a margin of 30-35%. If in case these stocks correct by say another 10% or so, then I think trying to go for a contra buy over there could be a better strategy because of the way the sector rotation could play out into these kind of spaces. The FMCG stocks have done reasonably well, and my sense is that many of these FMCG stocks, they still look very attractive in case if they find maybe one more leg of correction. So say the likes of HUL, for example, Britannia, ITC, I think these stocks are the ones which could look attractive.
Point taken. Time now to take the BTSC trades right now. Naresh, what's the buy today, sell tomorrow idea, if any, or is it STBT today?
So one buy, one sell. So first is the buy on Dabur, a defensive bet, stop loss at 640, target price of 660. Second is the sell on Dixon Tech, which has corrected right from the last few sessions and continues to drift lower. A stop loss at 12,300, target price of 11,800.
What about you, STBT, BTST, or a mix?
STBT. So both of them are sell calls, and the fact that Nifty is closing below the 25,000 mark, expecting follow through downtick for the index. So two sell calls. The first one is a sell on Petronet. That stock has confirmed a break down below its 50-day moving average, as well as a break below the 360 mark. So keeping 360 as a stop loss would suggest a sell with a target of 344. And the second would be a sell on IGL. The stock has yet again confirmed a reversal after a mild uptick couple of days back. So expecting this to convert into a short-term downtrend. Targets of 525, stop loss at 554.
Just want to check in on Vodafone Idea. Given that Goldman Sachs in their note yesterday, they maintain a sell, although they've hiked the target price now on this one. But they're saying that the path to FCF break-even and the market share recovery is very unclear, and that they see another 300 bips share loss for the company over the next 3 to 4 years. This stock, of course, is tracking quite hard. And Sudeep, do you think in these kind of market shake-offs, one needs to be extra wary of some of these two-digit kind of names? This along with maybe a Yes Bank, GMR Infra, etc. They're the ones which are really getting clobbered hard today.
Well, Vodafone Idea is a different story, Aisha. I have been always saying it's not for the faint-hearted. It's for somebody with a really aggressive investment strategy can look at Vodafone Idea. Look, the way I look at it, there are two issues. One is a balance sheet issue. The other is the operational issue as far as Vodafone Idea is concerned. The balance sheet issue, yes, it has been repaired to an extent, but the AGR dues of 70,000 crore plus is a huge burden around it. Now, there are expectations of some relief from Supreme Court, and whether the relief will be 50%, 60%, 40%, or at any relief at all or not is a big question mark. Now, if you assume there is no relief, I think it's a disastrous situation for Vodafone Idea. Now, if you assume 50-60% relief, okay, things improve significantly. Now, beyond balance sheet, I think look at the operational part of Vodafone Idea. I think consistently they have been losing customers month on month. Now, this cannot be a good news for a company which is consumer facing and retail. So this is a serious issue which needs to be repaired, which needs to be contained. The sooner the better. Now, if this continues beyond a point, I think it is disastrous, and it has been continuing for very long. The fundraising has happened, but in spite of that, month on month, they are still losing customers. This needs to be plugged. Now whether either of these or both of these or one of these will happen or not happen is in a realm of speculation. So yes, things can improve significantly, and you can get a better valuation. There are brokerage reports giving 20 plus value. And there are brokerage reports, as you just alluded to the Goldman report, they're putting a value of $2-3 to Goldman. So the range is quite wide. between 2 and 20 or 20 plus. So, you can see the situation. It is a big speculators or speculative investors, play field as of now.
Okay, point taken. So that's the latest coming in on Vodafone Idea. Not really for the faint-hearted. But in the meantime, before I bring on the voice of, Mirae Asset Management as well, if we can, let's pull up the soundbite of what CLSA's Vikash has to say, because a lot of action as far as OMCs is concerned. There's this fresh speculation at work, perhaps whether there is a case to be made for oil prices and the petrol and diesel prices for the consumers to be cut or not, given the fact that the oil price or the crude price have come off materially from $80 per barrel all the way to 72, and if there are some technical indicators to watch out for, it can perhaps go even below the mark of $70, which makes the case for a price cut for some of these petrol and diesel companies even more. We'll try and put up that a bit more, but before that, Sudeep, your word on the oil marketing companies, because they were seeing a great amount of traction this year and over the last 12 to 18 months. Do you think some of it could get undone if there is a price cut perhaps?
Yeah, obviously, to an extent, it will get undone. They have been enjoying, the oil prices have been stable and with a downward bias. Under the circumstances, oil marketing companies have been really getting the benefit of that. And a lot of the under recoveries of the past have been covered. In fact, they have started making money. So elections are around the corner in key states, and there is always the threat of price cut looming. It's also fair that prices have come down, global oil prices. So prices should come down from a consumer point of view. And with elections being around the corner, that threat is real. So under the circumstances, yes, one needs to be a bit cautious as far as BPCL, HPCL and others are concerned.
There are 3-4 factors which we need to budget in this. One thing is, yesterday OPEC Plus group has not moved for cutting, for rolling back the voluntary production cut which they had for almost another 2 months. It was expected that they will probably roll back the production cuts. And so that the fall in the crude prices was also in anticipation that there will be an additional supply of crude oil. And I think OPEC has reacted to that fall in the prices and trying to support their base price on that. That's number one. Number two, the market prices have been fixed for quite some long time. So it is an expectation on the consumer side, on the government side, that there will be a possibility of reduction, especially considering the assembly elections which are coming timing-wise. But we also need to factor in that the refinery GRMs have been weaker, and if you will see, the Singapore GRMs were negative yesterday after a very long period of time. So cracks had been under pressure on the refinery side. Now, whenever the cracks are under pressure, the refinery margins will be under pressure. The marketing margin, if the market prices are same, then marketing margins will be better. But if we reduce the marketing margins also, in that case, we need to see an overall basis. And I think instead of reacting suddenly for a sharp fall, it may be good to watch a little bit and then move forward on that, considering that what is the reaction of the market on the crude prices after the OPEC's announcement yesterday.
Right. Okay, that's the take coming in on, the benefit for OMCs with the crude price decline. The other pocket which has been holding out, or at least that was the case yesterday, was definitely the OMCs as well as the tires. The entire crude sensitive pack reacted for sure, given that crude prices have been on a declining trend for the past 3 consecutive months now. But Sudeep, do you think the concerns why paints as a sector began lagging because of heightened competition then in the sector, do you think are they behind us? And now with the crude prices being a trigger, one could see perhaps some bounces coming back?
Definitely not. I think the challenges as far as the paint sector is concerned, particularly with the established player, is real. I don't think it's going to go away in a hurry. With the entry of Birla Opus, the game is going to change, and the leaders in the industry, like Asian Paints, they will definitely be under pressure and probably lose market share. These temporary blips in oil prices will not have any significant effect, at least as far as the competition is concerned. In any case, one has to remember that the oil price impact comes with a lag, quarters lag, almost a quarters lag. So immediate impact on Q2 may not be there. By the time the Q3 ends, there will be lot many more changes in the sector with competition hotting up. So I don't think I will get excited about the paint sector with oil prices coming down.
Note, we let you go. Thanks so much for making time and speaking with us today. But time now to hear out the commentary coming in from Mirae Asset Management, because they remain constructive on the market, and that's the word coming in from Swaroop Mohanty. Hear out his take on the markets.
Our views on the equity markets are extremely constructive. Whenever such a thing happens and talk of valuations have to look at it from the broader market perspective. Yes, some parts of the market, when this kind of buying happens, might be expensive. But when some parts of the market become expensive, it opens the rest of the market to be fairly valued, and we are probably in that situation. The old cliched term of a stock pickers or a bottom of stock picker market is actually correct now. And when you look at it from the next 3-5 year perspective, our view is some parts of the market which have become fairly attractive could start a play from here on. The much needed diversification of the market is probably what can happen from here. We don't see much downside of the market as we speak.
As far as SIPs are concerned, and you were pretty bullish when even in your presentation you were speaking that this is a big boom as we speak. Do you expect this to sustain as far as SIP is concerned?
I mean, for the last 5 years, I was saying that there is no stoppage to this because the number of investors is just getting added. The financialization of assets is just about beginning in the country. So this is now beginning to become the go-to vehicle of investing for a lot of people in the country. And I don't see that stopping. It will only grow from here.
Any benchmark there for SIP?
So I would really like if the number of investors continue to double from here every time. Forget the AUM or the amount is an outcome. At this moment, with the stock markets and economy as it is, our job should be to add new investors. And in that, I see that number doubling in the next 1-2 years for sure.
As far as themes and sectors are concerned, if you could speak a little bit more on that, what's your view on stocks such as sectors such as defense, PSUs, etc., banking sector, your view on that?
So I think when you look at us from a portfolio level, we've also always maintained that defense and PSU have not figured very highly in our portfolio. So that's our answer to where it stands. But banks have to be differentiated in two parts, PSU banks and private banks. I think our house view is private banks are very attractively placed here and it's our top allocation in our portfolios. But, themes like healthcare, which includes pharma, are also a very good play for us. I think today when you look at consumption, it looks very attractive. So banking, consumption, healthcare remain our top draw from here on. Like I said, we will see broad basing of the market and some of the themes which played and have done good work for investors. Their fresh allocation should go into themes which hold great promise have probably not run. That's how you make money in the long run.
Okay, that's the take coming in. In the meantime, on the sidelines of the FIBAC event, Astha Chopra, my colleague, also caught up with Bank Bazaar CEO Adil Shetty. Here are a piece of their interaction.
So there's a lot of exciting things coming which are the next generation after UPI and Aadhaar. And all of them are to do with enabling credit. So the RBI governor spoke about ULI, which is Unified Lending Interface, and it's going to do to lending what UPI did to payments, and it's going to enable that by having a consent data sharing architecture for all data sources. So I think everyone's excited to see, one, how can ULI succeed and scale up like UPI, and also how can banks and fintechs collaborate on ULI? Because why is UPI so successful? UPI is successful because the banks and the fintechs came together and took it to world-class levels. How can in ULI the same thing happen, where the fintechs and the banks collaborate and make it a next UPI?
So what's the status of credits and deposits, which is the main agenda for the bankers as well, also for the fintechs? They played a very important role in loans, especially to agri sector or different sectors. So what is your stance on credit growth and deposit, and what do you expect in Bank Bazaar? How will the growth will go up?
Yeah, see, in India, if you look at private credit, which is all credit to GDP, we are currently at 51% private credit to GDP. If you look at any developed economy in the world, private credit to GDP is 200%. So where's 51%, where's 200%? And for our per capita GDP to grow, for us to become a developed country, 100% credit access to businesses, MSMEs, individuals has to increase. So we see this as a rapidly growing market. The opportunity is very large. People's per capita GDP is $2,500 now. It's going to grow by 10x in the next 20 years. So there's an incredible opportunity, I think, to offer more credit, but we have to be prudent about doing it. So what the RBI has said is, don't give 5 loans to one person who's rotating the loans. Don't take too much risk and over leverage someone, but grow in a prudent manner, because the opportunity is incredible, Ashita. We just need to do it correctly.
Okay, so that's the latest coming in from Bank Bazaar CEO. But for now, the market has recovered a bit. So we are not ending at the lowest point of the trading session. We have recovered almost 50 points from there. But can't forget the fact that it's a 300-point slide at the frontline index, 860 points shaved off the Bank Nifty. And even for Sensex, there's a drag of over 800 points as we speak. In fact, if you're looking at the frontline index, what's under pressure is SBI. Apart from that, NTPC, BPCL, ICICI Bank, Axis Bank, they too are under pressure. In fact, Nuresh, we have stopped talking about some of these, power companies which were in flavor earlier. So an NTPC, a Power Grid, a PFC, a REC, IREDA. What's the view on some of these names?
So going through a consolidation after such a rally. So if you look at a Power Grid, which continued slow and steady, is around the 330 price where it was on, say, the election day and a day before on exit poll. Same is the case with NTPC, which has not corrected much, is sideways. REC, PFC continue to see upticks and downticks, but have been sideways for the last 1.5 months. So, but they have not corrected like what has happened with the defense space as such. So, would consider it to be a consolidation before the next uptick.
In fact, I'm going to thank you all for taking the time out and joining in, and hand it over to Snehi to walk us through the closing trades.
Well, absolutely. Let's take a look at how today's trading session has panned out to be, and markets have continued to be under the pressure that we saw coming in early on in the trading session. Nifty is about to end with cuts of more than 1%. You have Sensex also in tandem, more than 1% cuts coming in on Sensex as well. Advanced decline ratio largely and very deeply in the favor of the declines today. And if you take a look at the broader markets have also not done all that much in today's trading session. Nifty Midcap has closed the day by lower 1.5% lower. Also, let's pull up Nifty Smallcap 1.3% lower, almost coming in on the broader markets as well. Now, let me just flag off some stocks that were buzzing in today's trade. First up, you had Viatech Wabag. That stock did pretty well on the back of an order win worth $317 million. KC International also held up pretty smartly on the back of that 1,423 crore order win coming in, 1% almost higher coming in for KC International. Strides Pharma also got a US FDA nod for its asthma tablets. So Strides Pharma also managed to hold on to those gains, and 1% uptick coming in on that front as well. However, RCF, they were raising funds up to 1,400 crores via non-convertible debentures, and that stock was deeply under pressure, 3.5% lower coming in for RCF. Let's pull up some other stocks. Brigade Enterprises, they are also raising 1,500 crores via QIP. Now, this stock held up pretty smartly during the initial sessions and continues to do so. In fact, 1.5% higher on Brigade Enterprises as well. Ashoka Buildcon, its subsidiary, has sold a land parcel in Pune for 453 crores. So you have that stock also in the green, up 1%. However, what did not do well today was Bharat Forge on the back of the weak North America GNA numbers coming in, and 3.5% lower is where that stock has closed. You have IGL also on the back of poor registrations in Delhi. That stock has also tanked in today's trade. Very quickly taking you through some brokerage action. SBI Card was a real winner in today's trade despite a weak market on the back of a very strong note coming in from Goldman Sachs. Aavas Financiers too on the back of a Goldman Sachs note did very well. Bajaj Finance, Bharti Airtel, both of these stocks were up on the back of a Jefferies and Goldman note. However, on the flip side, Vodafone Idea, big loser in today's trading session on the back of a Goldman Sachs note coming in, where they've maintained their sell rating. 11% lower is where the stock is. SBI also has been downgraded to sell from neutral, and Petronet LNG also, Jefferies has maintained an underperform. So all of these stocks did not do well in today's trade. But well, yes, that's how we are wrapping up today's trading session. Nifty more than 1% lower, cuts coming in 24,870 levels thereabout is where we end for the day.